Well, good morning, everyone. It's Stephen Whiteside here from theuptrend.com with your morning market outlook for Wednesday, April 15th. Well, once again, it's raining out there. April showers bring May flowers. We've also had thunder and lightning again. So if you hear any rumbling in the background, it's either the dog dreaming or it is thunder outside. So it's going to be one of the two. So far in the pre-market, stock index futures are fairly flat. Nothing much going on there. We've got crude oil back up at $1.74, so not a lot going on there given recent volatility. Gold is down slightly in the pre-market on Wednesday morning. Now, the VIX continued to move lower yesterday. Stock market indices continued to move higher. Uh, we're very overbought across the board right now. Now, looking at the price of crude oil, if you go back a couple of months till the start of the year, we were down near the $70 level on the USO. We've recently been all the way up above 140 and we've pulled back a bit. So we're still, what, about 85% above an average price. And that's what the world is dealing with. And the ramifications of that are going to last quite a while. The market apparently has shrugged all of that off and has decided to go right back up to the previous highs. So we've moved higher than I expected. I expected that we would get caught at the bottom of the range, not make it up all the way up to the top of the range. Now, using the Vanguard Total Market ETF as an example, we've got a nice big gap here. So most charts have a gap from last week. And that gap does not matter because it's behind us right now. So the market is continuing to move up, and any gaps below us are not a concern. When the market starts to turn back down, any gaps below become a potential target and an area of support. We don't have to worry about that at the present time. Now, looking at closing price, of course, if we want the market to move higher, we want to see the market close above the previous day's high. And in what's happened over the past couple of weeks, it certainly happened. Then the market stalled, then it gapped higher, and then we continued to move higher. Now, what we haven't seen is a day in which we close below the previous day's low. And that is the first sign something new is happening. It is not a guarantee that the market is going to head in the opposite direction, but it is the first thing we look for. So just having a down day does not mean anything unless we close below the previous day's low. Then we start to get concerned that the market is starting to turn around. Now, coming into Wednesday's trading action, we closed near the high of the day yesterday. So, we don't have any indication the market's going to turn down on Wednesday. Now, we are coming up to the previous highs for the total market ETF. For the Dow, we're being held back a bit at the present time. We've got two lines to go before we get back up to the $500 level. There's the S&P 500 trading right back up to the previous highs. The Nasdaq has a little ways to go. The Russell 2000, just a tiny move to retest the previous high, and a little more work to go to get to 273.44. For small caps, again, we've got a little more work to go. Another day or two before we get back to retest the previous high and hit our next price target of 281.25. For micro caps, we hit our next price target yesterday. We did not make a new high, which we made in January. But if you had an order in at 175, it certainly got filled as the high of the day was 175.24. Now, of course, the energy sector has been the big focus for the last couple of months, and we were up at the top of the panic zones. Early warning signal went off. We're starting to pull back. We're still projecting lower prices here. If you look down here, you can see that right in the middle is the $50 level, and that would be two lines down from where we are right now. So we've pulled back two lines from the high. No major breakdown so far. But if we do continue lower from here, $50 is certainly a legitimate target to the downside. And who knows, we may get back on the horse anytime now, depending on what crude oil decides to do and what the market decides to do with energy stocks. Yeah, semiconductors have been leading the market higher, but the transport sector has had quite a run over the past couple of weeks, even with the elevated energy prices. So obviously, investors think that these companies have the ability to pass through the higher costs to their customers, whether it is the public or corporate customers. So here we are, we're trading up at a new high and just above the 106.25 level. If we can keep going, then 112.50 would be our next target to the upside for the transportation sector. Looking at the Canadian market, and it's not as broadly based as the U.S. market is. We're more focused on the commodity sectors. Here we are with the iShares for the TSX 60 hitting $50 yesterday. The high of the day was $50.07. We closed at $50.05. So if you had an order in up there at $50, it got filled yesterday. So congratulations. If the market wants to move up from here, then $50.78 is our next target. The Vanguard Total Market ETF, which of course is a more broadly based ETF, still has some work to do before we get up to the recent high, which did not hit the $70.30 level. So we may see the market fade up at that before it hits the $70.31 level. Looking at stocks outside of Canada, looks like we made a new high yesterday, got as high as $54. We needed $53.31. So congratulations if you had an order in there. Small cap stocks still dealing with $35.94. The Venture Exchange moved up yesterday. Energy stocks moved down yesterday, didn't take out the previous low just yet. We, of course, may get back into the energy sector at any time now. We tried to hit 28.13, which was the top of our projected trading range on the daily charts and the weekly target. So you don't see that very often. Of course, if we start to break out above 28.13, we'll give you new targets. And if you don't see them, you can always do the math. Just calculate the difference between the two top lines there and just add that to the top. That would give you the next daily target. And of course, you can do the same on the weekly chart if we don't get to it first. Now, in the US, they have semiconductors. In Canada, we have financials breaking out to new highs. And we are trying to get to 82.81 is our next target for the financials ETF. For bank stocks, our next target is 65.63. So the banks, the financials doing very well at the moment. No joy for gold stocks, and they may be down a little today given the price of gold trending lower in the pre-market. We're trying to break out above 62.50. If we can do that, 68.75 comes into play. And then last up, tech stocks have started to break out above the March highs. Looking at this weekly price target chart, if you were following along with us on the weekly basis, we were looking for 75 to hold as support until it finally broke down. Then you look down two lines. That takes us down towards 62.50. We certainly traded down below that. Of course, $60 is a big round number. And so here we are coming back up, heading towards 75 now. On the daily chart, that's two lines up from where we are right now. That would certainly be a legitimate target to the upside. Okay, folks, that is all for this morning's presentation. It's kind of damp out there. I'm off to donate blood this morning. Hopefully you've got an appointment booked in the not-so-distant future. Have a great Wednesday. Next time you'll hear my voice is on Thursday morning.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theuptrend.com.